All right, onto your markets news now. Asian stocks traded mixed today with more of a negative bias. This as Chinese inflation data came in weaker than expected, raising concerns about a still sluggish economy despite the lifting of COVID-19 lockdown measures. Market players are also jittery in light of a more hawkish tone set by Federal Reserve Chair Jerome Powell earlier in the week. Despite the records showing that there was no growth in the Japanese economy in the fourth quarter, the Nikkei share index put in a relatively strong performance, closing up 0.6%. However, Hong Kong shares took a hit, with the Hang Seng Index closing down by the same margin. Mainland Chinese shares were also on a downer, with players expecting that the consumer price index for February would be coming in at 1.9%, when in actual fact it came out at 1% for February year on year. The Shanghai Composite Index ended the day 0.2% in the red. In the United States, the S&P 500 index closed slightly higher on Wednesday as investors grappled with mixed messages from Federal Reserve Chair Jerome Powell. In his second day of testimony to Congress, Powell reaffirmed his message from Tuesday of higher and potentially faster interest rate hikes, but said that debate was still underway, with a decision hinging on data to be issued before the U.S. Central Bank's policy meeting in 2 weeks' time. The Dow Jones Industrial Average fell by 0.18%. The S&P 500 gained 0.14%, while the tech-heavy Nasdaq rose by 0.4%. Well, to unpack the market for us, I'm joined by Sean Dendere. He's a senior sales trader at Thrive South Africa. Thank you very much for joining us, Sean. So what's your analysis about the Fed's more hawkish stance on interest rates, and where does that put emerging economies like South Africa?
All right, afternoon, and thank you for having me. I find it quite interesting, with regards to Jerome Powell's statements with relation to interest rates. I think that inflation has been a really sticky point, especially in the United States and globally at large. And I'm just looking at the United States, they are in quite an interesting phase where there is a tight job market, which is really affecting, all the policies that they're putting in with regards to interest rates. So looking at, South Africa locally, what I think is that we tend to follow what happens with, the United States. Therefore, going forward, I also do think that, we're going to see a slight increase in interest rates, as we are still just grappling with, with inflation. And then from a local perspective, we do have, the load shedding issues that are affecting, our different sectors and different markets at large.
Now, Sean, we know that you can't just look at one data point, but how concerned are you about China's growth trajectory for this year, and how does that translate for commodity exporting countries like South Africa?
I think China is a big player in, Africa at large, and, South Africa, we do export a lot of our commodities that side. And with their trajectory looking very low, I think it's the lowest in the past 3 decades, if I'm not mistaken on that front. It really is going to affect us in the long run. I alluded to load shedding earlier in my initial commentary there, is that from a mining sector, load shedding is really affecting, the output of, the commodities coming out of the country. And then you hear news that from China that, their growth is going to be low. So I think I'm looking from a mining perspective, is that we're in for a tough ride as well on that front.
So there seems to be a bit of sell-off going on as investors worry, about the higher interest rate situation globally, with the US Fed really seemingly pushing that. When it comes to South African stocks, do you see any value? Where do you see value in the South African market? Or do you, stay well clear if you're not invested already?
Honestly speaking, I think, emerging markets and South Africa, our stocks are undervalued. I've noticed that, the JSE has been trading at all-time highs, which, shows how, the markets are undervalued. I don't think that, the sell-off in the United States is going to affect us as much as, the market may think, just in my opinion, is that I think that there is a lot of room to invest in South Africa. Yeah, I mean, we're looking at, for example, banking stocks. That's where I'm looking at this point in time, with that. We had Nedbank release their results yesterday. They seem to have, really, really great results purely based on, the interest rates, the high interest rate environment that we're living in. And as much as, we've been grey listed and the like, I think the South African financial sector is quite robust, and there are good things to come from, that sector, in my view.
Yeah, well, just to challenge you a little bit there, I mean, if the South African economy is not set to grow or shoot the lights out, that significantly, then obviously the banking sector really hinges on economic activity. So it does beg the question whether going forward we're going to see the banking sector doing well. And just tying into that, you can respond to that comment afterwards. Just tying into that,
no problem.
Standard Bank released their results today for the 12 months period ended December 2022, reporting really good numbers. Headline earnings were up 37% at 34 billion rand. And they've also reported a very key performances in ratios like their return on equity. That's up quite significantly as well. Your reading of those results, and just speaking about the banking sector generally.
I mean, the banking sector, so I'm going to touch on the first point. So my point will be I'm going to join my 2 points. So with the first and the second point that you did ask there, is that we speak about, the low economic growth in South Africa. We speak about, the banking sector being robust. And then we're speaking about, Standard Bank's results being great. If we're looking at it historically, when we look at, global recessions, let's look back at 2008, for example, is that, the financial sector, the South African financial sector fared well compared to, the rest of the world purely on, our regulations, the FSCA, and then just the banking sector at large. So I do think it is quite resistant to, low growth, purely because looking at South Africa, yes, there might be low growth. However, most of our banks are operating in Africa at large. So there is, always money coming in from that side. And then with the interest that are really high currently, is that, when people are paying back, let's just use loans, for example, the banks are really making a significant income from that part. And then going back to when I was speaking about, the JSE and the stocks at large being undervalued, people are really looking at emerging markets at large. So we're now looking at it from a global perspective. So we can't, isolate it to the South African, low growth environment that we're in. Yes, it will affect it, but I do think, globally and international investors looking at emerging markets, the banking sector will fare well.
Yeah, no, fair point. A lot of the banks are Pan-African, if you like. Thanks very much, Sean, for your insights there. Sean Dendere, he's from Thrive South Africa. We're going to go for a quick break.